Hello, everybody. Welcome to Stock Market Jimmy. Today's going to be a good educational video for you guys. Now, here's the deal for all you people who taking the time to watch this, and you constantly watch all these different people on YouTube doing stocks and stuff like that. Even the good people who there's a few of them, very few, who really do a good job. Most of them are just have no clue about the stock market. They're just going off whatever everybody else is saying, and then they're just reporting things that are good, things that are moving. Anybody can do that. So what I want to start doing is I want to give you guys a really good education on the reality of what you're buying. So things that you can look into before you just listen to somebody and just start buying a stock. You have to keep track of the stocks that you're interested in, and you need to make sure that you understand when the earnings are, and you need to understand the results of the earnings. So I'll give you an example, okay? We're looking at GitLab, which is GITLAB Incorporation. The symbol is GTLB. All right, so let's take a quick look at GitLab. But what you need to do is write down GitLab on a sheet of paper, follow it every single day, and watch its fluctuations so you can get familiar with what the stock continues to average at. Get a good feel of what it's doing over a course of a month. Then what you want to do is you want to make sure you understand that on September 2nd, which is right around the corner for next month, they're going to be doing a report, their quarterly report. Now, as you can see, we're looking at a 1 year. And as you can see, this thing is at rock bottom for the year. So that's a good thing, right? It's at $40.42. Now, it's a good thing, meaning that you're definitely not overpaying for it here because the price is very low considering what it used to be. The year range is from $37.90 all the way to $74, okay? So why is it declining like this? Well, if you analyze the reports, the reports for this particular stock have not been all that great, okay? Now, unfortunately, what I don't really like about the Google section here, it doesn't show you like it does on my phone regarding these reports, okay? Because the reports are very important. Okay, so here's cash flow, here's balance sheet. Okay, so yeah, you're not really getting, here we go. Yeah, here we go right here. Okay, so you're getting some of the information on the reports, but if you do it on your phone, you're going to get a little more information. But the bottom line is that when you do look at it, GitLab was not all that great on the earnings. They had their earnings. So on my particular phone right here, on my cell phone, you can't see it, but I'm under the earnings now. So I'm going to share this information with you, okay? So I'll give you an example of what I mean. In the later months of 2024, they were on the EPS, they were around 44% in the green. And on the revenue, they were around 3% to 4%, okay? So now, all of a sudden, since April, they only reported one time so far in this quarter, which was April. And they went from being around 3 to 4% on revenue to 0.61%. They went from being 44% on the EPS all the way to 11%. So they've had a huge decline on the revenue. So if you're trying to think about buying GitLab, what's going to happen is you're going to be fine for the month of August, and you don't know what the fluctuations are going to be. People are not really going to be scared to buy GitLab right now. Why? Well, because you've got a whole nother month before they report. So you got to be a wise investor, and I'm giving you tips on understanding that. So So now here's the only negative thing. If you get in the stock and the price goes down to $35. Now, I personally don't see why it would go down to $35. There's really nothing there that would cause it to go down for $5 more. There's nothing negative about it unless some kind of news broke out. I don't really anticipate that happening unless, like, of course, the market just, collapses for something like tariffs or something like that. Now, this particular type of stock is not driven by tariffs or anything like that, so there's no worry there. If you look at a 5-year, we're liking the price of this stock. Now, if you look recently, this stock was at $47. Let's look at a month ago, okay? At a month ago, it was $48, just 30 days ago. So you have a possible $5 to $6 gain that could happen on this stock in the next 30 days. And you don't have any report that's going to be reported that would drop it. You really don't have any news that would drop this stock. So this might be a safe play for you for the next 30 days. All right. Now, keep in mind, make sure on September 2nd, if you're in profits or something, now if you stay in that stock during the earnings, you're either going to be happy you stayed in, or you're going to be really sad because it could get crushed depending on the earnings. So you guys have to understand that, all right? All right, so I want to share with you a stock that I have that I tried to get everybody in on, which is Hound, okay? Now, whoops, I put the wrong symbol in. Hold on one second. It's SOUN. There we go. Okay, now this particular stock is a perfect example of what can happen during an earnings. And in this particular case, it was very positive. Okay, so I owned this stock at $10.94. And when I was in the market on its earnings, which was just the other day, the stock soared from where I owned it. See here, right here, it's at $10.72. I literally got in at the right time. I bought it at $10.94, and the stock just went boom to $14.20. And now we're at the $13.53, okay? So, or actually after hours is $13.60, basically. All right, so that's a perfect example. Now, guys, the report that they did on earnings blew the water open. I mean, they literally killed it. They made so much money. This stock is going to be a $33 stock. $33 stock. So, yes, you're going to pay a higher premium for it. The stock literally just went up 31.5% in 2 days. In 1 day, really. In 1 day. It went 30% higher. It's one of the strongest stocks that you can own in the stock market right now. So any dip, and if you don't even wait for a dip and you just come in, sure, it could give back 10% maybe, but it's definitely a holding stock that has a bright future, okay? So that's what I'm trying to teach you guys, okay? Now let's get into SMCI, and I'll share my thoughts with you guys on this stock because there's a lot of you guys that might own this stock. Now, here's the situation with this stock. This is an interesting stock right now. It's at $44.60 at close. And obviously, if you look at the last 5 days, it got pretty beat up. It was at 57 and it's all the way down. It basically came down, guys, $13 per share. $13 per share. Now, why is it doing that? Well, the reason why that it's doing that is because they're not earning money. They're doing billions of dollars, billions with the B, and they're not earning money. They're earning pennies. Pennies on the dollar. Okay? Pennies on the dollar. So here's the situation with this stock. You have to look at the evaluation of a stock like this, okay? So what happens is that many stocks in the market are way overvalued. Way overvalued. Stocks like Palantir. However, they're consistently rewarded. Why are they rewarded? Because they make money. They're making money. And they're high demand. Okay? Now, this stock is high demand. It's high demand. They're in the top market right now, which is data centers. Energy and data centers are crucial right now. Okay? So they're going to get away with bad performance. They're going to get away with it. They're not going to get away with it as far as like their stock just keeps soaring. When you make reports like they just did, you're going to get hit hard. So they're going to get penalized when you make that much money and you're not making profit. The investors are bailing. They're not coming back in unless this stock goes to like $30 or $34. All right. Now, you're going to have the people who buy this stock could still benefit, because what happens is they come in at this time. The demand for data center is so crucial that they literally could get rewarded if they came in now and the stock could go back to $54. It's very possible until they report again. So it's so hard to say. I am not going into the stock unless it's $30 to $34. Just not doing it. Okay? I don't like the fundamentals of the company. I don't like the fact that they don't make money. Okay? I'm not interested in a stock that does not make money. They bring in a whole bunch of money. Now this stock, guys, made 1,300% in the last 5 years. Okay? Only this year is it's down. So if you were somebody that bought this stock at $4.21, of course you're going to hold the stock. You'd be crazy not to hold the stock. So that's a different situation. Most people are trying to justify, $36, $42, even $44 right now to come into the stock. Okay? So let's move on. I'm going to share with you because I don't have much battery life here on my camera, it looks like. All right, I do want to get into Honest Company. Okay, because Honest Company was a stock that I've done really well with on buying and flipping. Okay, now I am in a position with this stock right now where I did my normal buy at $4.46. So I'm in it for $4.46. Now that was my first bullet, so I'm only on bullet number 1, which means that I haven't rebought yet. It went all the way down to like $3.60, and I did not rebuy. I did not rebuy because I felt that that the history of the stock prevented that. So, for example, if I look at a 1 year. Okay, you've had lows on this stock. If I look at a 5-year, you've had lows on this stock that were $1.24. You had lows at $1.73, $1.74, $2.83. So there is a history, not a long history, but there is a history, which looks like it was COVID time, that the stock could go down to like the $253 range. So the way I handled it was I was like, look, don't worry about it. Just hold the stock. And it will go back to like the $420, $430, $440 range, which is around what I paid for it. Okay. So I just felt that there were too many other stocks that were dropping really low. and I would rather put my money into those. That was the only reason why. So there's no panic whatsoever. It's part of the game. Most of the time, I'm able to buy it for the $4.40, and sell it for $4.80 or $5. Most of the time. I make my quick $3,000 and I'm out. This time, I got stuck with my pants down. Okay, I got caught. The market changed. The honest company, I was in the stock during earnings. I took a gamble. I was praying that the earnings would be good. The earnings weren't bad, but they weren't good. Okay, they were average. They were a little below average, but they were not, they didn't lose money. They did not lose money. They basically broke even. So investors don't want to break even. So they bailed on the stock, and it went from $4 and whatever, 60 cent or whatever, all the way down to $3.60. And now it's came back about 30 cents. Okay. So in after hours, it's at $4 right now. So it's very possible that this thing could have another good day of run where it could go up to $4.20 or something like that. I think that it can get up to the 440 or 446, which is what I paid, without me rebuying it. And if it does do that, I'm going to sell it, which I normally would never sell it at 446, but I'm going to sell it because it's become where it went all the way from 360, then it would go all the way to 460, or 440, which means that I would get my money back without ever having to invest too much, bail on it, and hope that it goes back down so I can buy it lower. I'm being cautious on it, okay? Now, the good news is you've got 3 solid months to make money on this stock on buying the dips and selling it at the high peaks. So you just have to adjust to the new dollar amount that it's going to do throughout this particular quarter. Everybody with me on that? So it's a very simple game that we're playing. You just have to be able to bounce back. Now, the good news is I have plenty of money to rebuy dips if I wanted to. Now, if it comes down again to 360, I'll probably go ahead and throw some more money in so it'll allow me to exit quicker, and this time with profits, okay? So I'm just looking to break even on it, get out, hope that, have all my money free again, and hope that it dips back down again, and then I'll buy it. All right. So here's a stock too that I started a position in, which I bought this stock I ended up buying this stock at $30. I paid $30 for this particular stock right here, and it's at $32.44 right now. Okay, so this is that energy company I was telling you guys about that's at its all-time low. So I did start a position, and I did get it for $30 on this particular stock, which is a really, really good price. So if it goes down below 30, it would have to go to about 25 for me to buy more. So I'm in a really strong situation with this stock. Now, I don't expect this thing to really do well until March of 2026. So I'm really kind of more investing for the near future on this particular stock, okay? Let me see what else I want to get into before we go. Let's see, anything else that's interesting. Now, here's a stock that I'm holding off on, which is Serve. I like the potential with this stock, but their reports are just horrible. They're just bleeding money. They have not made a penny yet. They're wasting their time on stupid stuff like building robots, spending tons of money to go send a robot to make $2 on delivering somebody's lunch. That's ridiculous, okay? There's no money in that. There's no money in that. No wonder why they don't make any money, okay? Because they're wasting their time on stupid stuff, all right? Now, what they should be doing is using their software technology and getting these robots to all of the buffet restaurants around the world that have buffet restaurants. All they need to do is put the robots as, you know, with these, they need to make them where they have a bus tray built in, and the robot goes around the room and you put the dirty dishes in it. It's programmed to stop at every single room over and over and over throughout the day. And people, every time people eat, they just put their dirty dishes in the robot. The robot senses the weight, brings it back to the kitchen, they unload it, and the robot's back picking up dirty plates again. Okay? So now, who would buy that? Well, restaurants would buy that. Okay? Restaurants will buy the robot. Restaurants will repair the robot from their service. They can send a tech person. So there is a demand for serve robotics. I just am not seeing it booming anytime soon right now, guys. I don't see them making any money right now. Now, if this is a big, if there has to be something, it's possible that they could have a robot that comes out of the vehicle to bring. So if you can build a delivery for Uber, if you can have it to where it's a part of the Uber vehicle, where it comes out of the vehicle and brings the food to the front door, and then you give it whatever you need to give it or whatever, and then it comes back and gets into the vehicle again, and then the autonomous vehicle takes off. Now that could bring value, okay, if they could do something like that. So it has potential, but right now my money would be more on Hound than Serve Robotics. Between those two stocks, in my opinion, there's no comparison. Because I'll tell you one thing right now, guys, on that Hound, boy, is their technology solid. You want to talk about a company that is set up to make a ton of money, it's Hound. They're making it in the automobile business, and they're making it through drive-thrus. The technology on the verbal communication with that machine is unbelievable. Unbelievable. Okay? Anything else that I want to talk to you about before I let you guys go that I feel might be some hope for? Let's talk about NVO. Okay, this one, guys, is starting to go. It's starting to go. So if you see where it's at right here, you got that little upkick. You went from 48 to 51. Okay, you got a couple dollars on an upkick here on NVO. So this one could be one that you want to start a position in. They've had their share of struggles, but there is a lot of potential with the stock like this. So it's probably a gamble, but it could pay off as a big gamble. So that's up to you. You can research that, but they have a very good opportunity to make you guys some money. All right, so that's going to be it for today. My stock target is up. I bought it at $99. It is now at like 105 on target. I'm probably going to ride that through the winter months during Christmas, and maybe early into February, and wait for their final quarter report, and then probably bail when it's around $111 on that one. Okay, so that's all I got to report for today, guys. Thanks for watching, and I'll see you guys on the next one. Hit the the like button for me. Appreciate it, guys.